Todd Hultman from DTN is our market analyst this week. On July 2nd, the USDA released its latest crop progress report. The report showed 76% of corn was in good to excellent condition, just down 1% from the previous report. This rating remains the highest since 1999 for corn. The report also lowered its good to excellent rating for soybeans to 71%, only 2% lower than last week. That's also the highest good to excellent rating since 2014 for soybeans. We met with Todd on Tuesday to learn more about how the weather and the expected tariffs between the U.S. and China will affect prices and exports, but began by asking him for his analysis of the crop progress report.
Well, on the planting side, for the first time since 1983, we have more soybean acres than corn. That's something new and different to get used to. It's a trend that's been coming on for a long time, and this time they finally crossed. It's not a big difference, about 89.5 million acres of soybeans versus 89.1 million for corn. So they're still very close, but this is another part or sign of world demand growing for soybeans and protein all the time.
Let's talk a little bit about the crop progress report, and I know there's a little bit of a dichotomy in terms of some weather issues, in terms of maybe some hail damage and flooding.
Yes, absolutely. We've got in the northwestern plains here, we've got several areas where there's been flooding problems. We've had serious hail, and yet USDA's crop progress report comes out with very high crop ratings for both corn and soybeans once again this week. They came down slightly, but we're still looking at a very good crop potential for the 2018 season. That's very tough, I understand, for a lot of farmers who are in those distraught areas, but overall we've had widespread beneficial rains for the Corn Belt in general, and that's why those crop ratings are staying so high. We've seen it in other years where there's been areas where crops did not do well, we had flooding problems, and yet when we get to fall we still have a big harvest. So far it's looking somewhat like that.
Let's talk a little bit about prices. A lot of things are impacting prices right now. Let's talk about some of those issues.
Yeah, well, the month of June has been very tough on our corn and soybean prices. Corn down roughly 50 cents since late May, and soybeans down roughly $1.50 since late May. So those are significant drops, and it started with good early crop conditions for both corn and soybeans. As we got the corn and soybeans planted, we actually had a pretty nice month of May for all the planting activity, so that all went well. And then on top of that, we have this trade situation with China, the world's largest buyer of soybeans that we're having a dispute with right now, and that adds to bearish concerns on our grains, but in particular our soybean prices.
Let's talk a little bit more about those tariffs. What do we think is going to happen there?
Well, Jerry, it doesn't look good at this moment. So far, it looks like on Friday, July 6th, that is the deadline when China is expected to enact a 25% tariff against U.S. soybeans. Now, it's going to be charged to those who import soybeans, so it's actually charged to the Chinese businesses that are bringing the soybeans in. There is a possibility, and I can't say we have anything firm yet, but there is a possibility that the government may find a way to ease the burden on those importers, because the bottom line is China still needs U.S. soybeans. Brazil had a record crop this year, but that export supply is not going to last them forever. Sometime this fall, I'm thinking possibly late September, early October, China is most likely going to still need to start buying U.S. soybeans again for at least a 4-month period. So the government may find ways to help their importers. Of course, if they do, that would help the volume flow from the U.S. But the bigger concern is that as long as relations between the U.S. and China are somewhat hostile or adversarial right now, China's going to continue to just minimize their U.S. soybean purchases and get as much as they can out of South America. So that's the longer-term concern for our U.S. producers.
Another area of concern with trade is NAFTA.
Yes. And there again, a couple of our best ag trading partners, Canada and Mexico, and we still don't have an agreement yet. The president said the other day he doesn't really want to sign anything until after the fall elections. So we'll have to see how that goes. But Mexico in particular has been a wonderful buyer of our grain products this year, and we need those relationships to continue.
Now, the value of the U.S. dollar is also having some impact?
Yes. The U.S. dollar's been rising. The bottom line there is the U.S. economy continues to outperform the other major economies of the world, Europe in particular. That helps us have a rising dollar, but it also makes our grain exports a little more expensive. So that just adds to the tariff concerns we have right now. And along with that scenario is the thought that we're going to continue to have gradually rising interest rates in the year ahead. So those two kind of go hand in hand. And of course, our U.S. producers don't like to see higher interest rates at a time, especially when our grain prices are low.
So let's ask you to make a prediction. What's going to be happening in the next few months?
Well, it's all going to come down to weather, which is no surprise. Weather is always the key each year. If the weather continues to be generally favorable for the Corn Belt region, I think it's going to be very tough for our December corn prices to move much from where they are from right now, which is around the 360 area. We still have pollination in front of us. There's a concern about hot nighttime temperatures in the forecast for pollination time. That has been known to reduce yields. We'll have to see how that plays out. But I think as we look right now, we can't say that there's going to be any significant production hit yet. Similar for soybeans. We're looking at November prices below $9 a bushel right now. Of course, a lot's going to happen depend on what happens Friday with the tariff deadline and how the U.S. responds to that and how that continues to play out. But right now, it's hard to give much bullish hope for either one. I will say the one thing that's supporting our corn prices right now, USDA's estimate of world-ending corn stocks is lower for the season ahead. So there is a significant reduction there, which should help corn prices have better support through this time. But once again, it all comes down to if we have big crops in the fall, it's going to be hard to get anyone to encourage to be buying corn or soybeans.